Trump's energy stocks will help you retire early. This one stock, the ticker is EOSE. They do battery storage, had 100% revenue growth quarter over quarter. So it doubled. That's a pretty big move. It's not a lot of revenue. It's 10 millions or so. What is impressive is there are a lot of battery companies, battery storage companies as well. This one is holding up the best. Battery storage is needed not just for electric vehicles. You know, Tesla has the power charger, power wall you can keep in your house. For if the power goes out, you can use that battery to charge to run your electricity. It's not just to charge your Tesla. EOS is bringing that technology to the grid, and the grid is becoming sexy, exciting, investable, growing at a high rate in terms of market cap, these grid companies, because the data center companies are growing at a high rate, because OpenAI is having a valuation in the stratosphere in the 500 billion plus range down. So it's all connected, and EOS is providing that storage for wind and solar, which are really intermittent. And there's tons of capacity, but it doesn't always become available at the right time. So batteries help smooth out that load and literally balance it. There's another company, ticker symbol CLS, Celestica, that's also benefiting from the AI data center boom. They do connectivity, so server connections, GPU connections, it's networking, and it's a massive company, $3 billion in revenue, multi-billions, up 20-30% year over year growth. So it's a lot for a big company. Now, there's a lot of networking companies as well. I'll jump into all of them in just a moment, but CLS is holding up exceptionally well, even though it's had a massive run. So let's jump into these price agreement, what I call them, charts right now to actually visualize what we're talking about here. It's not financial advice. Hope it helps.
This is Sam Putnam.
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 So here's the chart for EOSE, EOS Energy, and you see a higher low here. So what that indicates is stock went up, right? People wanted to buy it. They said, oh, it's not quite worth that much right now. Went down, and then they said, well, it still wanted more than it was a week ago down here. So there's demand, and now it's leveling off. So if we really zoom in on here, you can see the opportunity is pretty clearly in all of this zigzaggy, is it worth this much? Nah. Is it worth this little? Nope. Price action over here. So 15 is a really important level if you want to get granular. This high would be great to risk 15, 16 as we open up in just a few minutes here. You can see the time. We're about 10 minutes from open on Monday. Of course, if this chops around and you see this the next couple of days, end of the week, this 15 is important. And then over this high of 16, which is right here, will also be important and clear your easy levels to risk off of. Of course, as you've experienced, I'm sure, can you sometimes get a move where, it goes up over 16 and then, fails and goes below and then actually breaks out? You can. So sometimes you have to take an entry or two, as long as your total risk budget is not more than, say, 0.5% of your account at most. That would be acceptable. So if you have a 500K account, you really don't want to be losing more than 2,500 getting positioned in one of these stocks, considering you might lose, 8 times in a row. And then those 2 losses more than make up for all those 2 wins, more than make up for all those losses. So, if you lose 8 times in a row and you lose $2,500 a piece, I don't know if that's a huge deal for you, but I don't want to, that's $20,000, right? So anyway, that's the opportunity in EOS. And then if you look at CLS, you see the strength as well, higher low we just talked about, and some growth, upward movement in the pre-market already. So it is a little bit of gap up. You don't always want to buy a gap up. The market itself is not really gapping up. It's just moving sideways. So this gap up is sort of isolated to CLS. Of course, this is not a real-time video. I mean, you can see this in a few days. If this comes back, rejects, that would be ideal. You know, if you did something like this. Of course, that's the dream, right? That's where the price agreement is so tight that when it does go up, people say, okay, we're going. You know, everyone's agreeing. Well, enough people are agreeing it's worth more. And you can get a move like this Tesla back in August, okay, which is just incredible volatility contracting and then exploding to the upside. Does it always happen like that? No, but it's, you know, translates across asset classes. I mean, if you look at Bitcoin, this is very similar to the Tesla breakout, right? Does that look similar or does that look similar? That was actually last year, but we got a similar little move here. You know, it's not that little, it's 15%, but Bitcoin, of course, during horrible, right? Now a little bounce, you know, MicroStrategy having a little bounce as well. But, you know, I should start calling it strategy. That's what they changed the name to. I don't want to buy this. Do you want to buy this right here? I mean, it doesn't look that exciting. So let's jump into a little about these actual energy equipment companies, because, you know, it's great to be excited about what they look like on the chart, but it's also helpful to get a little bit of context and make sure if you do own this, you know, investigate. So sometimes you do it in that order, but it never hurts to investigate before you buy it. So 30 million revenue, up 100% from the prior quarter. So ChatGPT is many times above revenue from the same quarter last year. It's like, okay, so I think what these things is like they basically had, you know, a few million revenue or something one year before. Massive growth. We can check that if we need to, but I don't think we need to. Revenue guidance is reaffirmed, so you have all the sort of, I mean, the earnings reaction definitely sold off, so we don't want to read into this too much, but at least we're seeing that, you know, that sell-off was partially the market, and if we look at some other companies as well, FLNC sold off a little bit here. This is into November 20th that FLNC was going down, so that sort of lines up. FLNC went up since then, but and then there are some battery companies as well, not just battery storage companies, that are worth keeping an eye on. This is a big backlog, 600 million for a revenue of 30 million so far in this quarter. Of course, over the whole year that'd be 120, but this is crazy, right? I mean, that's like 5 times their annual revenue. So they have enough work to do 5 years of work. So they're obviously going to have to expand, or, you know, hire people, do some acquisitions, or, you know, shed some of this backlog, no pun intended. So anyway, they did have a loss, and maybe that's an indication that this is a startup. I mean, it is a startup. So you can see all these, I don't know what's going to happen to this load balancing startup, but what you do know is that you don't have to bet on it over the next year. I'm literally talking about, if it's not very clear from other videos, if you can get a 20% move, which is, you know, risking, I don't know, 20 cents to make $2, right? $2 would be up to 17.17. So 18.18 would be 20%, I guess, but that's pretty big. And there's enough liquidity to it. Trades on average, maybe something like, I don't know, call it generously, conservatively, 5 million shares a day at, you know, a little over $10 is something like, call it, you know, $8 million a day. Well, not 8 million, that would be 80 million. So you can put a 1/100th of that with a click of a button and not even move the stock at all. So it'd be like 800K with the click of a button. So there's plenty of liquidity. If you're, you know, super aggressive, you could put up to like 5 million, I guess. But anyway, that's helpful because that means you will get some trends. It's not going to just totally chop or chop out, or, we're not messing around with its stock. But you might be interested in Kit. I've mentioned it on this channel, but the liquidity is big right now. But if you look back, it can also be kind of a trap. So if you do buy this and then you don't pay attention, you could get caught in some kind of trades 100,000 shares a day at $1. It's 100K a day. You're just totally stuck with that. So those are sort of a comparison of options. And if we look at some of the other battery options, we can pull them up over here, but FLNC is definitely the main comparison in energy storage. It's not totally, so this backlog is legitimate, I guess. FLNC is not totally similar, but Fluence, they do storage plus software solutions. They're definitely a peer. We can exactly look at what their description looks like, but we just want to differentiate between energy storage companies and actual battery companies. So Fluence, it sounds like, does do energy storage products, pretty much the same thing. They're a subsidiary of Siemens, which is a massive company. And it looks like they also do a lot more. So sort of software monitoring. I think EOS is the most pure play. They literally design, manufacture, and deploy the battery storage solutions. So this is what you want to watch, FLNC and EOS. This one I haven't really heard of as much, EnerSys. They actually make the batteries as well, it sounds like. So we'll actually look at all of these at the same time. So ENS is one, Generac, and NRGV as well. So ENS looks like it's pretty illiquid. I wouldn't have any sort of interest in touching this or even paying attention to what it's doing, even though it looks like it's going up. Generac is looking strong. It's a little more liquid, not a lot more. Well, actually, it's a $100 stock, so it is pretty liquid. It's trading like, what is this? 300,000 times 100 would be 50 million. That's not actually 300,000, like 500,000. So it's pretty similar. Maybe slightly more liquid and more cyclical. I mean, this is kind of a pain to trade. I did mention a company a few days ago, IoT, that is also a pain to trade. That even though a company can have a great reaction and holding up, so you can risk very little. When you risk very little and then it just never moves, or it does move up and then moves down, it's also not interesting in the long run. So, a little side note on that. I don't regret mentioning it, but I won't mention it again unless it shapes up. NRGV, kind of has moves like that, but this was pretty clean, so this is a little better. And then the liquidity here is pretty much not, so definitely won't mention this. All right, so if it trades, 10 million a day, we could just completely ignore that. So it's really just Generac and Fluence, and then as far as, I'm mentioning a lot of names because some of these other names are interesting as well. AMPX, QuantumScape are the main battery companies. So they actually target EVs as well, because they actually make the batteries, I believe. So that's AMPX shaping up, enough liquidity, 50 million. And EOS looks a little better. We can sort of see how similar they look. But I do think this higher low, this shelf, it's very similar to AMPX, but I guess we can look at volume too. I don't know. I mean, they kind of seem like a toss-up. This is sort of not a lot of movement in general. I mean, we're up 20% to $12, $10 stock, whatever, and $15 stock, up like 20%. They're going to move together, it seems like. So pick whichever one you're most comfortable with. EOSE definitely has had the cleanest move since the tariff bottoms. So AMPX had a little bit of a pullback, which, if you buy it here and you're just stuck in it for, a full month and a half, you might sell out and miss this breakout and miss out on an extra, 100%. So it's a close call. QuantumScape as well in the conversation, holding up here, and yeah, it's interesting, but again, it's very volatile. This is a big down move, 30%, but totally liquid, even more liquid actually. So in the mid-low hundreds of millions of dollars per day. So EOS Energy is the stock. There is another stock that's interesting that I barely even talked about. That's CLS, but that level is pretty clearly 339, and you can risk off of 328. So breakout level versus the actual risk level. So pick something that makes sense to you. Maybe you buy it at 350 and you risk 345, or you let it go through there and then come back and then risk off of 332. I'm giving you a lot of levels because this isn't like a prescription. This is more of a recommendation, an idea. So that's definitely firming up, but it's also up a lot. So keep that in mind. Keep an eye on AAOI, COHRLITE, and LUMN as well. They're all in the same optoelectronics networking category. So hope that helps. If you like those ideas, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to jump in the Discord, where I'm headed right now to drop what I think is the best idea of the day, head over to stockscommunity.com.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.